Welcome to this explainer. If you're a financial pro, a corporate accountant, or just someone who closely tracks regulatory shifts, you already know the stakes for tax compliance have literally never been higher. We're operating under a totally new legislative framework, and the deadlines, well, they're approaching incredibly fast. Today, we're giving you a rapid-fire summary of the critical upcoming tax compliance deadlines published by the Income Tax Department of India. Specifically, we're zeroing in on those urgent dates hitting us in July 2026. And look, this isn't just about filing forms anymore. It's a whole new ballgame in a completely restructured system.
Okay, let's dive into this and lay out exactly what we're covering today so you know exactly where to find your specific filing responsibilities. First up, the 2026 tax landscape. Then we'll tackle the July 14 crunch. After that, certificates and statements, followed by remittances and exchanges. And finally, we'll ask, are you ready for compliance?
Section 1, the 2026 tax landscape. The rules of the game have officially changed as of April 1st, 2026. To really get why these deadlines are so urgent, we've got to look at the macro landscape. It's all about the year 2025. We've seen a monumental shift to the newly enforced Income Tax Act 2025, and this acts as the absolute bedrock for every single compliance update we're about to run through. We're officially closing the book on the Legacy Income Tax Act of 1961 and stepping fully into the 2025 Act, along with the corresponding 2026 rules. The old rulebook is officially out. So, as taxpayers and corporate accountants, we literally cannot rely on muscle memory or our old compliance habits anymore. The sections have changed, the forms are totally updated, and the regulatory expectations are entirely new. Moving right along to Section 2, the July 14 crunch. Time to get into that immediate cluster of deadlines. Now that we've got the new legal foundation down, let's pivot to the micro level. July 14th, 2026. You're going to want to circle this in a thick red marker on your calendar. This is the absolutely critical compliance deadline across multiple sectors. Whether you're dealing with domestic tax deductions, government offices, or international remittances, a massive cluster of deadlines lands on this exact specific day. Missing it under the new 2025 Act? Well, that could trigger some pretty immediate compliance failures. Section 3. Certificates and statements. Now, what's really interesting about this breakdown is how we transition into a highly specific who does what matrix. Let's start with government and market filers. If you represent a government office or you manage TDS, listen up, because these form numbers are your top priority. By July 14, you must furnish Form 137 under the new 2026 rules. That's for TDS or TCS paid in June without a challan. Now, right alongside that, tax deductors have to issue certificates in Form 132 for May 2026 deductions. Did you catch the trap there? The compliance months actually differ. June for Form 137, May for Form 132, but that ultimate July 14 deadline remains exactly the same. And these requirements extend straight into the financial markets, too. By that exact same July 14 deadline, stock exchanges are required to submit a statement in Form 1. So, what's the logic here? Well, it's a statement for June 2026 that details transactions where client codes were modified after being registered in the system. If you operate in the exchange space, tracking and reporting these modified codes is absolutely a non-negotiable deliverable. Section 4. Remittances and exchanges. Let's move forward to the next major category of filers. We're specifically targeting those of you dealing with foreign funds and cross-border transactions here, and this brilliantly illustrates how the new income tax rules for 2026 tightly group these international reports. Authorized dealers, you've got to furnish Form 147 for quarterly remittances ending June 2026. In parallel, IFSC units must furnish Form 148 for that exact same quarter. Both of these massive quarterly compliance statements for international funds crash down on, you guessed it, that exact same July 14 deadline. Section 5. Ready for compliance? Let's zoom back out to the broader tools out there. With all these incredibly tight deadlines hitting at once, the CBDT has actually provided some lifelines to help us navigate the transition. Let's briefly unpack the actionable tools you should definitely be using right now. First, make sure you're using the new UIN number format for Form 121 that completely replaces the old 15G and 15H. Next, keep a close eye on the second and Nugent initiative regarding foreign assets, which is a great move to strengthen voluntary compliance. When it's time for actual filing, definitely lean on the new online form wizard. And perhaps the most vital tool for this whole phase, the IT bill comparison tool. It places the 1961 Act and the new 2025 Act side by side. perfectly decoding exactly how your specific filing requirements have shifted. So, we arrive at the ultimate question. The rules fundamentally changed on April 1. The forms are different, the section numbers have totally shifted, and the 2025 Act is officially the law of the land. With this critical cluster of compliance deadlines for TDS, remittances, and exchanges all converging on one single day, are your internal financial processes and systems truly ready for July 14? Review the new forms, use the tools available, and ensure your compliance is absolutely airtight. Thank you so much for joining me for this explainer.